Hello all, myself Ms.Mithra.B, Department of Commerce, Digital Marketing and Data Mining. Today we are going to see about Financial Statement IAS 1 in this lecture. First one, IAS 1. IAS 1 presentation of financial statement sets out the overall requirements for financial statement. Which means it provides overall requirements of financial statement. And what does IAS 1 means? It includes how they should be structured and minimum requirement for their content and overriding concepts such as going concern, accrual basis for accounting, current or non-current accounting. The standard requires a complete set of financial statement to comprise statement of financial positions, a statement of profit and loss and other comprehensive income, a statement of changes in equity and statement of cash flows. This is known as IAS 1. Component IAS 1.10, which means a statement of financial position, balance sheet at the end of the period, a statement of profit or loss and comprehensive income of the period presented as a single statement or by presenting profit or loss section in a separate statement of profit or loss, immediately followed by the statement presenting comprehensive income beginning with profit or loss. This is the another component, a statement of changes in equity for a period, a statement of cash flow for a period, notes comprising a summary of significant accounting policy and other explanatory note, comparative information prescribed by the standards. This is known as components of IAS 1. Next thing is objectives of IAS. The objectives of IAS 2007 is prescribed the basis for presentation of general purpose financial statement to ensure comparability both with the entity financial statement of previous period with the financial statement of other entities also. IAS 1 set out the overall requirements for the presentation of financial statement, guideline for their structure and minimum requirement for their content. IAS 1.1 standard for recognizing, measuring and disclosing specific transactions are addressed in other standard and interpretations. This is known as objectives of IAS 1. The next thing is scope of IAS 1. IAS 1 applies to all general purpose financial statements that are prepared and presented in accordance with International Financial Reporting Standard. Next thing is components of FS. A complete set of financial statement includes a statement of financial position, balance sheet at the end of the period, a statement of profit or loss and other comprehensive income for a period presented as single statement or presented as profit or loss section, a statement of change in equity for a period, a statement of cash flow for a period and comparative information prescribed by the standard. These were the components. And then fair presentation. What does mean by fair presentation? The financial statement must present fairly the financial position, financial performance and cash flow of an entity. Fair presentation requires the faithful representation of the efforts of transaction, other events and conditions in accordance with the definition and recognizing criteria for assets, liabilities, income and expenses set out in the framework. The application of IFRS with additional disclosure when necessary is presumed to result financial statement that achieve a fair presentation. The next thing is going concern concept. The conceptual framework note that financial statement are normally prepared assuming the entity is a going concern, which means financial statement normally prepared that assuming the entity is going concern and will continue in operation for the future. IAS 1 requires management to make an assessment for an entity ability to continue as going concern. In this lecture, we saw about the financial statement IAS 1 components, objectives, scope, fair presentation, and going concern concept. Thank you.